What's up, YouTube, Instagram, social media family? It's Cameron Gunnels of Gunnels Realty. Today, I wanted to take some time to really break down the current situation and status with the real estate market as we transition from 2025 into 2026. We saw a lot of hype, right? We saw a lot of headlines. We saw a lot of positive, well, really all negative, to be honest with you, all negative media about where the real estate market was going. And so my goal for today is to hopefully bring some clarity and some perspective around how the 2025 real estate market ended, and then also what we should look for here in 2026, right? So starting with 2025, it really, for Cincinnati specifically, it really wasn't about a dramatic boom or bust. It was about sustainability, making smart decisions selectively. I know we all saw the national headlines, as I mentioned before, but as we drill deeper, it really becomes nuanced based on which market you're actually in. So I guess some key stats for Cincinnati: the median sales price was $285 within the city. When we zoom out, and granted that's for November of 2025, that's a key detail. But then once we zoom out and we look at the greater Cincinnati MLS region, now we're including areas like Mason, Westchester, places like that. The median sold price went up to 310 and 320, which is to be expected because, of course, those are suburban areas. But all of this shows is that we had strong resilience in pricing throughout 2025. Per Redfin, when we look at time on market, it was modestly, I guess is the word, modestly longer than years prior at 50 to 55 days, and that's specifically for areas like Hyde Park, Oakley, and even Westwood. So again, what we saw was not necessarily collapse, right? Those numbers don't say massive collapse, the world's coming to an end. But rather, it says something more like a balanced market where buyers gained more ability and power to negotiate, more leverage. And sellers, they're starting to realize that they need to present their house correctly, right? Whether that be staging or whether that be pricing it more effectively. So what I would say when we look at 2025 as a whole, and we're asking ourselves what shifted, the big takeaways are that it's becoming more of a balanced market. Gotta take this, never stop. This is Cameron.
Hi, Cameron. My name was inquiring about the apartment that's on Vine Hill.
Yeah, sure. Actually, if you're able, what I can do, is this your cell phone number?
Yeah.
Okay. Well, I can shoot you a link to the application as well as the listing, and then you could check that out. You could see all the pictures, the prices on there as well. And then, if interested, I'm actually headed to a dinner here in 30-ish minutes. You could shoot me a text, and we can set up a time to tour it tomorrow.
Okay, then I would really appreciate it.
Perfect. Awesome. Well, I'll be looking forward to hearing from you.
Okay, thank you.
Thanks. Bye.
Bye-bye.
As we can see, the real estate market's still strong. I'm just playing. All right, so, but I guess getting back to it, where we were talking about what this meant, what 2025 meant, and how that really signified a shift in the market. Not a crash, but a shift to more of a balanced market, right? So what are some big takeaways? I guess we could say, mortgage rates, they did decrease moderately, but they're still high. We're not seeing that 2% that we saw back in 2020, 2021. So what does that mean for buyers, right? They became more payment focused. They're not necessarily chasing super low rates. They're crunching numbers and they're making good decisions as they should. Things like inspection requests. If you remember back in 2020, 2021, it was so competitive that people were buying houses and just completely waiving the inspection contingency. Now we're starting to see inspections come back. We're starting to see people negotiate more. So again, this is a shift from what we saw pre-pandemic and just, during the pandemic. But again, it's not signaling a market crash. We've got inventory improving, right? A lot of people would say, when inventory spikes, all of a sudden we're gonna head into a catastrophic crash. it's improving, but the important part is that it's improving in a healthy manner. Okay. So as we fast forward, again, I think it's January 10th today as I'm recording this. So when we jump to what 2026 actually looks like, it looks exciting, to be honest with you. Price expectations, not many people are expecting super, super dramatic blow off top price increases, but they're not expecting price decreases, right? A lot of analysts, right, they're saying that we could see a healthy 2 to 4% appreciation. And that's super consistent with what we've seen over the last 50 to 60 years within the market. Best case scenario, if you're in a triple plus neighborhood, you might see 5 to 10% appreciation, and that's assuming demand picks up. And then, of course, the third would be a flat, just we stay steady and consistent. So it really depends, but none of the people who are way smarter than me, none of them are really saying that we're headed to a true cataclysmic crash. But they're also not saying that we're going to see prices go up to Mount Everest. And that's really just because Cincinnati, it's not one of the, especially if you're from here, that it's always been a truly fundamental Midwest city. It's driven by employment. We've got P&G here, a steady demand, and truly a solid culture, if I had to put it, bluntly. And so what does that mean? That means that buyers are going to continue to buy, sellers are going to continue to sell. The only difference now is everyone is making better decisions, as they probably should have always been. As for inventory, what does inventory look like in 2026? Ironically, that's probably one of the most under or misunderstood parts of the real estate market. Inventory is increasing. Like I said before, it's not a flood, but with that increase, it's still uneven. There's still a whole lot more people who want to buy a house than there are houses for those people to live in. And that's not just in Cincinnati, that's nationally, that's really all over the place. But what this means that buyers are going to be able to find opportunity, but where you are matters. There's going to be those super hot markets, and there's going to be those markets where, you're going to have to hunt the market and really find something. So it's really going to depend on where you're looking. And then to wrap up, really I can't overstate this enough. The importance of remembering that just like any other asset market or capital market, something that's equally as important to the numbers, or maybe even more important than the numbers, is going to be market behavior. And so for buyers, right now, they're spending more time analyzing listings, saving listings to their Zillow, really going through the long-term viability and livability of a home. And they're making fewer emotional decisions, getting into less bidding wars, and making more thoughtful offers. For sellers, the market doesn't really reward unrealistic pricing anymore. You have to come correct when you come to this market here in 2026. In homes that are correctly priced, they'll go, especially if they're well presented. So the big word for me for 2026 is going to be efficiency. 2026, strategy beats timing. Preparation is the new leverage, right? So it's about being prepared to put your house on the market. If you're a buyer, it's about truly evaluating the deal, because unlike the pandemic years, seasonality, it is retiring, and it's not retiring, returning rather to how it was pre-pandemic. So that means the spring equals peak demand. The summer equals steady, but I guess selective would be the word. And then, of course, the fall, you're starting to slow down. And then the winter, buyers typically have stronger negotiation ability. So again, timing does matter, but not timing in the sense of timing the market, more so timing in the sense of timing your strategy based on whether you're a buyer or whether you're a seller. And I hope that made sense, but feel free to drop a comment if it didn't. So bottom line, 2026, we're going to see price growth, moderate price growth, key there. We're going to see inventory continue to improve, but again, it's going to be uneven. There's still going to be more buyers than there are houses on the market. Buyers and sellers both are going to need to have a clear strategy, right? They're both going to need to, when they enter the market, they're going to need to know what they want and honestly stay true to what they want and not let emotion take over. And then, rates and affordability, they're going to continue to move towards stabilization. So, of course, if you want more local data, I'm sorry I went on way longer than I was expecting to, but if you want more local data, whether it be neighborhood breakdowns, personal, suggestions or strategy, feel free to shoot me an email. My phone number, maybe not my phone number, my email is going to be down in the description. And I look forward to hearing from you. And I hope you guys all crush it this year. And we'll see each other on the other side.